Hi, everyone. My name is Clay Carrington. I'm the Executive Director for the Canadian Blockchain Consortium. I'm excited to be continuing our series of video podcast interviews. And today I have the privilege of interviewing with Jean Desgangne. So I'm really super excited to have you on the show today, Jean. Thank you so much for joining us. All right, so a little bit of thank you. So a little bit about what we're going to be talking about today. So Canada is undergoing just a massive shift in its financial systems towards this greater acceptance of digital assets and currencies. And Jean is helping lead the way to this new era of blockchain capital markets. So he's been appointed as the CEO of Canada Stablecorp Inc., and he was appointed back in 2009. And he's overseen the development of QCAD, which is the first fully compliant stablecoin that's backed by the Canadian dollar. So he's bringing this incredible wealth of experience from the traditional finance sector. He's held executive positions at banks like UBS, Bank of Montreal, TD Bank, and he's brought his truly innovative leadership to positions like President and CEO of TMX Group, Global Solutions, Analytics and Insight Strategies, and the President and CEO of the Canadian Depository for Securities Limited. So we're so excited to have you here today, Jean, on our podcast to share your insights on how digital currencies are becoming more integrated into the broader financial sector. So it should be a good discussion. Yeah. All right, so I'm going to tip it into my first question. So as a longtime executive in the financial services sector, what was your initial impression when you started hearing about things like blockchain and digital currencies?
Interest and shock, and when we started to learn about blockchain, I mean, we'd heard about Bitcoin and sort of it was out there. We didn't really understand what that actually meant. And when we started to work on the actual implications that blockchain has, or the power that it can bring to financial services or finance generally. I'm also a CPA on the board of CPA Ontario, and when we think about the power of a tool that can reconcile positions or maintain positions reconciled in real time across all interested stakeholders, you start to wonder, why you need accountants and auditors and all those type of people. And I can tell you in CPA land, we're very, very focused on how we evolve our profession to address that. But in the space of capital markets, when I first started learning about blockchain, I was leading the Depository for Securities. And for those of you who don't know, that's the place in Canada where every single equity and fixed income trade comes to settle every night. And CDS moves about $1 trillion worth of value every single day at 4 o'clock over the space of a minute or so. And a lot of energy and work goes into matching trades and moving the money and keeping the collateral and doing all that kind of stuff in the background. All of that stuff might not need to be done if the capital markets were fully digitized. If you had a way to tokenize all of those securities, if you had a way to tokenize the money that you need to do to settle those securities, you wouldn't need to have clearinghouses that check credit ratings and maintain collateral and spend lots of time looking for settlement breaks and making sure that when you give the stocks, you get the money at the exact same second. There's a lot of energy that goes into that. And in a blockchain world, as we know, all of that just kind of happens. I'm oversimplifying a little bit, but it sort of does. And so as leader of the clearinghouse, I was intrigued. As I said, I was a bit scared because this was our business, but also thrilled around the potential this could bring. The reality is that the traditional, what I call analog capital markets, have been around for a long time. There's a lot of institutional sort of controls and processes built in to maintain security and investor protection and all those other great things, and those are all very important things. The result of all of those is it makes it very difficult to change. And I've always, as I started learning about blockchain and other developments, it's been clear to me that the capital markets are going to go to a fully digitized place some point in the future. But it's also been clear to me that that will not happen until we can replicate in digital capital markets land all of the boring financial market infrastructure tools that we have in analog land. So strong and well-regulated exchanges, ways to represent securities. Right now, it's paper that's kind of digital, but tokenized assets would be a way to do that. Payment rails that move money at the same pace as securities, because if I give you my security, I kind of want the money right away. And the reason we can't do that is why we have an organization like CDS that actually acts as the middleman to deal with that trust issue. My friend Alex McDougall often talks about blockchain as a tool that solves the problem of trust. You don't need clearinghouses. You don't need lots of other things if you can trust that the transaction will in fact match or reconcile and that it will settle through a smart contract or whatever. And so I think that as we create exchanges, reliable data, payment rails, all these things in digital land, the need for all of the expensive, slow infrastructure that we have in analog land will slowly go away. Now, obviously, the regulators have to catch up, and lots of people who frankly have a lot at stake need to buy into the fact that it's worth doing it differently. I was an executive in a series of banks, as well as a leading exchange group, and they have very successful businesses doing things the way they're being done now. And when you disrupt that, you create certain stresses and pressures that they have to cope with. I find it fascinating, as I speak to the beginning of March, Coinbase announced their IPO last week and suggested that it might be worth as much as $100 billion. That's more than any of the traditional stock exchange conglomerates in the world. It's mind-boggling when you think about something that didn't exist in any real sense 5 or 10 years ago, and because they focused on a new way to manage their version of capital markets, they may have a stock market valuation that's bigger than everyone else's. It's the power of disruption is amazing. So this is a really exciting time to be focused on blockchain, and specifically the piece that we focus on is the payment capability within that. So there's lots of people who are talking about tokenizing assets, whether it's stocks or art or music or whatever. And I would argue that's the easy part. Like, as I alluded to again earlier, I can have a tokenized asset. I can transfer that asset to you, but I want to be paid in the same immutable, timely way as I gave you the asset, right? Because I want my money. And unless you've got a payment mechanism that's just as fast, just as immutable, just as reliable, it's not going to work. And so bringing in a tool like QCAD, which we've developed, which is a payment token, a stablecoin token, to facilitate all of those payment processes, as we get bigger and more known, it becomes the grease that can manage many marketplaces, if I can call it that, from capital markets to art to any other place where someone needs to exchange an asset for money.
Nice. So would you consider stablecoins a kind of like a natural evolution to current financial markets, or because you've mentioned before that you saw it as disruptive? So do you see it natural evolution, or more stablecoins are going to be able to disrupt the more traditional financial markets?
I think stablecoins are one particular financial market tool. In and of themselves, they don't do anything. Where they become powerful is when you combine them, and where you get the disruption is when you combine the stable coins with decentralized exchanges, with tokenized assets, with all those, start to bring all those pieces together. That's how you get disruption. You could argue that a stable coin, is just an electronic version of a Canadian dollar, and how is that different from my debit card from TD Bank or the gift card I got from Amazon or whatever? And in a sense, it's not different, but in another sense, it's completely different, because it can be used at scale. It can be used to power all sorts of large scale market type exercises. Which my bank account at TD or my gift card can't do. And so I think the stable coin in and of itself is not, is really just an evolution of existing technologies. But when combined with the other things that are happening in the blockchain and digital space, I think all of that together is a significant disruption to how the capital markets operate today.
Absolutely. So since QCAD is something that's truly like new to Canada, having an actual like Canadian-based stablecoin, leading the way as innovators and disruptors, as we know, it's always kind of a bit of a difficulty, can pose all kinds of challenges. So what was it like? What was your experience like working with regulators to create this like fully compliant product?
You know, at its heart, the idea of a stable coin is quite simple, right? Is that we collect fiat currency, we issue a stable coin 1-for-1 against Canadian dollars for every dollar we collect. We put the money in a segregated bank account, so it's always available to cover the QCAD for those who want to redeem it, and then you drive on. And so everyone gets that. Where it starts to get complicated is people wonder, well, is it a security? And if it's a security, you know, you have to issue a prospectus and all that other kind of stuff. Well, clearly, you know, doing that for a stable coin where the value is linked to a dollar is not really a useful exercise. And securities law doesn't really have a good paradigm in which you can fit stable coins. And so that's been a struggle for securities regulators. I think, you know, the banks have struggled with banking us. You know, our account's been fired from a few banks. Which I take as the experience of many colleagues of ours in the digital asset space. I think
That's very true.
some more traditional organizations struggle with how they fit this into their AML kind of AML philosophy. I mean, I find it actually quite funny. You know, in the traditional cash land, the AML controls exist sort of at the point where people bring dollars in and take dollars out. So if I come in with a briefcase full of 20s, you know, the AML controls kick in. If it's more than 10,000, they file reports and all that kind of stuff. And then if I come in the next day and withdraw the money, there's an AML process around that. But once I withdraw the money and I walk around with my briefcase full of cash, there's no way for anyone to track that until it comes back into the banking system again. Whereas in stablecoin land, we know the address of every single address that a stablecoin has been to. Now, we may not know exactly who the owner of every address is, though there are capabilities being developed by law enforcement and by independent organizations to do a good job of tracing that. So in our world, we actually have much better traceability and controls around how this stuff moves around and is used than anyone has in cash land. But again, because like any disruption, because cash is the business people know and the processes are the processes they know, people are uncomfortable with new, and they're uncomfortable with trying to take their existing process and way of thinking it and kind of, you know, cramming it into this new world and making that work. And we're excited to be working with more innovative banks like VersaBank. We announced last week a partnership with VersaBank, who actually understand what this is and understand how to structure it in a way that meets all of those types of AML, KYC control type requirements, while still allowing us to grow and prosper this business.
Which is absolutely huge, because I know in the blockchain, or I guess like crypto space, it is near impossible to be able to get banking. So definitely a huge congratulations to Stablecorp for being able to find such an innovative banking partner.
Yeah, we're quite excited. You know, when you look around the world, the largest, you know, most of the stable coins are US dollar based. Not necessarily based in the US, but tied to the US dollar. And there's very little outside of the US dollar. We have this one in Canada, QCAD, which, as you said, we launched a year or so ago. The beauty of the deal with the arrangement with VersaBank is that we're actually going to, because it's a bank, this will actually be characterized not as a security, but as really a $1 transferable, cashable, digital GIC. So it's effectively a series of small deposits that are transferable, and so we can move them around exactly the same way you would move any other stable coin, or frankly a dollar bill. But the beauty of this is because it's a deposit of a bank, it's not even like the big stable coins in the US where you put your money with USDC and then they deposit it somewhere with the bank. Here, the deposit is directly with the bank, and the token you have is actually a claim on a bank deposit, which has all of the regulation and all of the process and comfort that you get from dealing with a bank. So it's a very innovative way to think about this, and I think it provides a much larger amount of comfort and security to the users of these tokens, and much greater confidence that the money's there and that they'll get it back when they decide they want their fiat back for their their stable coin. We believe once people get comfortable with that, they won't necessarily want their fiat back because they'll just be able to trust that it's there, just like we trust that the $100 sitting in our checking account is always going to be there when we need it. This is in fact no different than that, other than it's digital and transferable and tokenized.
Yeah, absolutely. Well, I know there's a little bit for people to get over that hurdle of that tangibility. They feel like, okay, I have my dollar bill or my $100 bill and I can go and withdraw it and I get something tangible if I go to the bank for it.
Yeah.
And I think there's just that lack of understanding that, that $100 bill is really just an IOU for something that's digital that sits on the bank's balance sheet. There's not enough actual tangible physical cash to represent all the money the banks actually have in circulation. So it's helping with that education towards like your money pretty much is digital and you no longer need that physical IOU for representation.
Right. I mean, one of the challenges you look in cryptocurrency land, for those of you who deal, or those of us who deal in Bitcoin or Ether or what have you, I remember my very first experience investing in Ether, in the first run up, and I decided to sell it sort of not at the high but close, which was nice. But once I sold it, my money was sitting with the exchange. I asked them to wire it to my bank account, and so it came out of my account at the exchange. And for a week, like I didn't know where it was. Right, it was sort of somewhere on its way to me, and eventually ended up in my account. And so, so we have this problem in every exchange, right? Where you accumulate the fiat there, but when you actually want it back, there's this kind of process, and none of these exchanges are subject to deposit insurance, and they're not regulated like banks, and so you really, how do you know the money is going to get back to you? The beauty of having a stable coin is as soon as I sell my Bitcoin, I can turn it into QCAD, which I know is a claim on a deposit at a bank, and so even if which can be transferred to me. And I know how to redeem it. And so that whole uncertainty about will I actually get my money back goes away because I know it's a claim on a bank. And banks in Canada are very well regulated and very secure. So it solves an important problem. And I think as we've been talking to some exchange groups, they don't want to be in the fiat business either. Like when they onboard you or you move money in, like this whole business of bank accounts and wires, and it's just a lot of operational grief. It's a lot of sort of risk and liability. You're holding people's money, et cetera, and you don't want to lose it or have something bad happen. If we could actually take that exercise, outsource that exercise to our business, where we'll take the fiat, turn it into a stable coin, which then enters the exchange, then these exchange groups don't have to touch fiat. They could just deal in what they're very good at, which is dealing in cryptocurrencies and tokenized assets. They can focus on what they're good at. We can focus on what we're good at. Everyone is more efficient, and more importantly, everyone is more secure. And so that's another sort of use case that we bring in. Another really exciting use case that I see here is as we grow our Canadian version and by the way, we're going to rebrand QCAD to VCAD. Reflecting the initial of our bank sponsor, and also driving home again the point that this really is, a deposit and a claim on the bank, ultimately.
I'm gonna need a new T-shirt.
What's that?
I'm wearing a QCAD T-shirt. I need a new one.
We don't have a VCAD T-shirt yet. We're designing them. But another really interesting use case here is foreign exchange. Like I know any of you who've ever gone in to get foreign exchange to pay a bill or go on a trip or whatever, the spreads that you get charged by, unless you're dealing in millions of dollars, the spreads you get charged by banks are very, very wide. And if you have a QCAD and if you have a VCAD and a USDC trading out there, I can then in crypto land trade a US against a Canadian position and actually get my position in the other currency for a fraction of the spread that you would get by going into a branch and doing it as a physical transaction. So for that to happen, we obviously need to grow the market cap of VCAD in terms of how many are out there, but we fully expect that will happen. And then you have another use case where we save consumers and other people money. Another thing that gets us really excited is when you look at the decentralized finance land and the kind of lending activities that happen at Genesis and at Celsius and other places like that. Stable coins are an important part of that ecosystem, and a Canadian dollar version of that I think would be very helpful for Canadian Canadian holders of cryptocurrencies who want to either borrow in Canadian dollars or have Canadian dollars as collateral. So there's a bunch of use cases like that we're developing that we think will help truly help bring scale to this. And we think that our partnership with VersaBank, as well as our new strategic investors that we announced last week, so Borderless in the US, DV up here, and a third-party private equity fund are also going to help us sort of create momentum and interest and help us grow our market cap here. So we're quite excited by what this can do. Back to your question, what this can do for the markets and for participants like us in those markets.
Absolutely. So you've mentioned some really incredible key benefits, especially in terms of helping exchanges get off trying to deal in fiat currency, letting them focus on what they're good at, which is more of those crypto digital currencies, and allowing you to be that on-off ramp for like physical like Canadian currency, which is fantastic, as well as being able to create more of a position if you're looking to get into Canadian versus USD currencies. So taking kind of like a long range view, how do you feel that these stable coins could be used further down in the future, like besides those two awesome benefits that you've already cited?
I mean, ultimately, let me go back to my roots where we started. I talked about I led the clearinghouse. The reason clearinghouses exist is that we don't have trust in the capital markets, and you need a middleman that takes everyone's positions, matches them up, and because we have T+2 settlement that holds collateral against market moves in those two weeks and 2 days and all that kind of stuff. And so there's no reason that we can't tokenize stocks. I mean, stocks are sort of half digitized already. Right? I can go into my brokerage account and buy 100 shares of Bank of Montreal, and there's no paper that moves around. Now, the little secret is that historically there's been one piece of paper, CDS, that was worth 1 billion shares of Bank of Montreal, and that's what allowed CDS to run electronic markets. There still was a share certificate somewhere. That share certificate is digitized, but it still exists. So tokenizing assets is easy. We could easily create a token for every name that trades on the TSX. As I said, again, the important thing that you need, so as these trades are happening, and there's millions and millions of trades every day, right now they kind of accumulate, till the end of the day where they get matched, and then 2 days later they get settled. We could create with stable coins as the payment mechanism that can move, as I said earlier, in the same fast, immutable way as the tokens can. We could actually have settlements happening in real time. I could actually get paid for my sale of stock or my sale of bonds or my purchase of something in real time. So you wouldn't need a lot of the infrastructures that exist today. They're really just there to preserve trust, to reconcile, to ensure you don't run off with the securities before you pay the cash and all that kind of stuff. This solves all of that. For that to happen, obviously this has to have a significant amount of scale. When you're settling $1 trillion worth of stuff every day, I mean, that's gross, not net. But if you're going to do one-to-one payments, you're going to be dealing with gross amounts, not net amounts. You need a lot more scale in terms of the number of stable coins that are out there. And some might argue in the long term is why you need a central bank or other people to start to sponsor this. I'm not sure that's true, but that's certainly an argument. You also need to have faster ways to settle blockchain transactions. We launched our token initially as an ERC20 token. That doesn't settle quickly enough for what we're talking about. Stock exchanges match equity trades in microseconds. You think about how long it takes you to type it in, they match them in microseconds. So we need to be able to have a settlement mechanism that operates as quickly as well. And so ERC20 is not going to be the answer. We're already talking to other protocols like Algorand that can do it much faster, and frankly at a very tiny fraction of the cost of doing an ERC20. And again, those are all, I come back to, these are all the fundamental things that need to get solved before we truly have digital capital markets. But I see no reason why at some point in the future, our stock exchanges are all fully digital and they're all fully blockchain enabled, and this stuff just matches. Ditto for our payment mechanisms, et cetera. I mean, there's no reason why that can't be true other than we've got to solve a lot of these plumbing type issues. The regulators got to understand how to fit it into the paradigm that they have, and we need to create scale. All small problems, but
Oh, for sure. I can think of one. I love to travel. I miss traveling very much.
yeah.
Looking forward to when that comes back after the pandemic. But one of the things I noticed with traveling is I would always, order money at the bank for whatever I was going to, and then you're paying these absorbent exchange rates, and then you're, trying to keep that cash very safe, knowing you could still use your credit card. More like credit card than debit cards when you travel overseas. But what would be really exciting is if I have like an app and it's like, okay, I have my QCAD and I can exchange my QCAD for like Japanese yen or for any other currency in that stable coin, and it's an instantaneous transfer and it's a much smaller fee, as you had mentioned prior. Like the margins are more narrow, but then I can just go pay for it within that digital currency. Like if the vendors will accept their their form of digital currency, it would just be phenomenal. You have one wallet, you only need one stable coin, you can exchange it for all the other ones that you want, and then you can go transact globally without having to go to an exchange place, take out the cash, or pay ridiculous
absolutely
fees.
And that's a great use case. And I think as we evolve to that, because people like that little restaurant in a back street in Florence may not necessarily accept a digital or a stable coin version of the euro, but you could have maybe in the early days you need to have your wallet could be these digital currencies in the background, and you probably still need a bank or a Visa company or something as the sponsor, so that that little store thinks they're dealing with Visa, but in the background it actually is a stable coin enabled capability. I think over time we're not going to need that middleman anymore, and there'll be broader acceptance of this. It's an open question whether we need central bank sponsorship of these things before you get that broader acceptance or not. I don't know. I mean, the reality is, central banks, I know the Canadian Central Bank are very, very smart. We were dealing with them in my old roles at TMX a long time ago, talking about the future of what they called e-cash or e-currencies. We did a project with Payments Canada and the bank when I was at TMX to look at how you could apply this to the large value payment system, which kind of operates in the background. So they understand this stuff well, as does the Fed, as do other banks around the world. I think that there's just so many issues they have to work through around their prudential sort of mandate and all of the other broad things around the economy that's going to slow them down in doing this. Plus, they have to do it at scale, right? If the central bank is going to do it, it can't be just for the citizens of Wawa, Ontario. It's kind of got to be a lot broader than that. I'm quite excited by it, and I think your use case is a great one. There's no reason that this can't be ubiquitous. And what this allows, again, because there's very little friction, because it's fast, because the transactions are immutable, because the transactions are inexpensive, you can apply this to the smallest transactions, and it still makes a ton of sense. And I don't have to wait for a Visa bill next month that's going to have all those small transactions I didn't know. Oh my God! All of a sudden I have $1,000, and so all this stuff kind of happens. So I think that's a terrific use case, and it just highlights the role this can play in the retail sort of consumer space. I think to date most of the people who've been interested in this space are more cryptocurrency literate. I think the broader population hasn't really. I know in Toronto we had that site called Buns that tried in the background to have a blockchain enabled payment rail, and they were probably ahead of their time. But as we get better at this, and as we have credible, trusted, regulated partners like VersaBank, it starts to put the pieces in motion where you can actually create trust and scale and start to look at these types of use cases.
This is absolutely phenomenal. Well, as a traveler, I look forward to the day where your QCAD is accepted all around the world. All right, so for my last question for today, with your strategy for stablecoins digital evolution, are you planning any additional stablecoins or potentially other securities to add to your portfolio?
So again, we're not securities. We're a payment mechanism sponsored by a bank. But yeah, we are. And in fact, we've talked to VersaBank. In fact, was in some of our our disclosures last week, that we actually VCAD is going to be the first one that we issue because we're in Canada and that's what we do. But we're certainly very interested in expanding into VUSD and some of the other G7 currencies after that. Because again, I think some of those use cases are only powerful if you have, like the use case you talked about your phone, or a use case of just basic FX really only works if you've got a multiple number of currencies to choose from. And so absolutely, I think we're going to focus on Canada first because that's where we are and it's what we know. But I think we'll be looking to expand certainly into the US space and potentially other spaces after that.
Well, that is incredibly exciting. Oh, I'm very excited for this. It looks like my dream for traveling with not having to carry physical cash with me is going to come true.
It's interesting. One of the questions that David Taylor, the CEO of VersaBank, got in their announcement press conference last week was he actually used the example of traveler's checks as a way to describe it.
That's a good one.
Example. So effectively, what this is a digital, transferable, immutable, immediate settling traveler's check is another way to kind of think about it.
Yeah, absolutely. And I don't have to worry, well, unless I lose my phone, but ideally I'll just have a backup where it's my password, my iCloud or something like that.
Well, hopefully you're kind of biometrically managed.
Yes, definitely. Facial ID and all that. Well, thank you so much for being with us here today. I am really excited to be able to talk to you about all these incredible things. And I'd love to have you back, definitely as more of your amazing story starts to unfold and you have incredible updates. Please come share them here for all of our listeners.
Awesome. Thanks for having me. It was fun.
Awesome. Well, thank you so much. This was fantastic.